Hello again, everybody. It's Harry Box, the technical trader, and it's Sunday, May the 1st. A special video for you, a complete review of the box and short list, as I believe the markets are in a precarious position, even though they keep plugging along. I think they are vulnerable to a 15, 20 point pullback or thereabouts in the S&P over the course of the next couple, 3 weeks potentially. And it hasn't started yet. So, but in anticipation of that and in preparation of it, I wanted you to take a look at our list of box and shorts, and I've added a bunch of new ones this week. That's in particular why I'm doing this video. Let's take a look at Akamai, which has been on the list for a while. You can see that big run up, topping pattern, the gap down that broke it, the snap back. This is where I featured it around 43 and ran down towards the 34 range. Did a three-wave come back or rally back, and then reach the top of the channel and then gap down again last Thursday, big time. Losing 604. On Friday, dropped another 50 cents. At this point, it may be in jeopardy of cracking here, and we could see potentially a move down towards the $30 level short term. That's Akamai. AMSC continues to drift lower, but at this point, I am not at the point where I would recommend any new shorts. It's already dropped from 37 down to 11. The big hit, though, was when we saw this bear wedge that got crushed after gap down big time from about the mid-20s down to the low teens, cutting it in half. A brief bounce and then a drift lower, got all the way down to about the $11 range. But at this point, that's probably not as strong a short as some of the others we'll be looking at. Broadcom boxer shorts has been on the list since February when it snapped back to resistance after breaking the head and shoulders type top. This bear wedge of sorts that formed right in here, which was noted at the time. Led for the stock to come from 42 down to 37 before it bounced a week and a half ago, only to get crushed last week from the 41 range down to 34 range. 7-point drop in the last 3 or 4 sessions. At this point, Broadcom, which has taken out this next level of support here, may be vulnerable to something in the low 30s. Let's call it 31, 32. Crown Corp. Crown Holdings used to be Crown Corp Conceal, CCK, nice rising channel, and then beginning to roll over, form a head and shoulders top. You can see the 2 down days, 2 big ones in the last, or 2 downside reversal bars, big ones on strong volume in the last week and a half or so, followed by this little bear flag. If we break this line right here, I think this stock could run down hard down towards the 34.5 range, and then maybe even get down to the next target around 32. That's my trading target for CCK. Carnival Corp, the cruise lines. We've been on a list since it broke here and formed this little bear flag. It's been drifting lower. Snapped back last week to the declining top sign moving average and the long-term rising channel that has been broken. And then it began to roll back again. Still looking for down around the 33.5 range short term. Secondary target of 31 range. CPLA continues to drift lower and stair step lower with a big hit, rising wedge, another big hit, bear flag, rising wedge, another flag. You can see how it continues to lack any thrust on bounces, although it's consolidating nicely in here. This could be in preparation of more downside towards the 40-42 zone. Now, some of these stocks have been already come down quite a bit from where we first recommended. Cree, for example, dropped from 57 down to 39. Over the course of the last 6 weeks, and yet it hasn't really been able to bounce much and could even go lower. At this point, I look for around 35 and then 30, particularly if the market gets ugly for a while. CZZ. Now, an interesting, this is kind of a Brazilian sugar products company. Nice run up from the 7 range up to 14.75, but it's from multiple shoulders, head and shoulders type top. Broke down and rallied back in a bear flag here. This looks to me like it should break and get down towards around 9.75, 10, my next target. Decker, well, a very, very big run up over the last couple of years has taken this stock from 12 to 97. However, big break on Friday with a big gap to the downside, dropping 9.59. And on 3.9 million shares, maybe may have broken the back of this uptrend. We'll see. It has not taken out this lateral support right here at this trend line, but I'd be looking for that. And then there's a long-term trend line at about 76. That's my first target. Secondary target at 70 at the January spike low down here. So in this, these are my two targets, 76 and 70 for Decker. Ensign Group, big break on Friday. After forming a little head and shoulders top here, left shoulder, head, right shoulder, excuse me, a big drop of 407 or 12.8% on the heaviest volume all year may have broken the back of this trend. You can see the trend line here, firmly broken with a gap to the downside. Now, the gap was filled here, this gap here, and this price support was tested indeed, right there, and it did bounce a little bit. Let's see if there's any downside follow through. But what I would look for in this one is potentially a little bit of a bear flag snapback and then a rollover down towards the 23 range, my next target, secondary target at 21. Heartware, HTWR, big run up over the last year or two from 18 to 99. Topping pattern, left shoulder, head, right shoulder, broke. Excuse me, and then gap down with a little bit of a flag forming here. We're snapping back to test a fairly low volume with a little bit of lack of technicals. There is a technical thrust, I should say. There is a gap in here that we're testing right now as we speak. This is an important area to fail at if it's going to go lower. Keep an eye on that one for Heartware. Jobs, JOBS, has had a big run up over the last few, excuse me, sorry, the last few months and years. Let's see, it's gone from 6 to 68. How about that run up? Is this breaking down here? Looks like it may have, this little volume spike down here, pick up in volume, may have triggered this move down. We're now at the this longer channel bottom, and notice the reversal on Friday ran up to 59.02 and closed at 55.94. That to me looks pretty negative and could lead to lower levels. I look for a test down around the 46 level, and eventually with my first target of 49.550. So 50 and then 45 and 6 ones. Lamar advertising continues in a negative mode. Topping pattern broke, snapback, failing at the moving average, and rolling over down 61 cents on Friday. But this one could break and break hard and get down into the mid-20s at some point. Long Top Financial was on our bear list a couple weeks ago when it broke down from 33 to the 26 range and bounced, but then it rolled over from 29 to 1670 just in the last week and a half. A tremendous drop. Anyone who had that short was happy camper. Big bounce from 1670 back up to 22, but I'm not sure this is a major bottom yet. I think that stock could consolidate and then roll over some more. Lexmark, looking pretty ugly and has as a massive one-year top formation may be forming. You'll see this breakdown here, bear flag, stair step lower, another bear flag, and then finally we got a little bit of a snap up here, but it failed at resistance right at that line. That's key. Came down, held support and bounced right to the declining tops line. And now I'm looking for the stock to collapse. Actually, excuse me, it did collapse last week down to longer-term support near this 32 range. Multiple lows in here. It's trying to bounce here, but a takeout of that level should lead to 28.5 pretty quickly. Test of this gap in here. Perhaps even longer term, down towards 25, depending on the market conditions, of course. Marriott has been on our list for quite a while now. It's broken its key support line here, broke the trend line here. Then the down channel, it snapped back to the top of that channel and backed away. Keep an eye on that one. Northern Oil and Gas, one of my favorites for the last couple of years. Ran from $2 to 33 and change, almost 34. Came down from the bear wedge, bounced, broke down, and snapped back, but is in a distinct down channel right now with moving averages rolling over, so be careful on this one. The downside target around 17 for Northern Oil and Gas. Novelis, NVLS, nice uptrend. Tops were broken here. The stock consolidated above that, ran up, came down, formed a bear flag, broke through, snapped back to the moving averages and failed, and last week rolled over hard. My target, 29. Secondary target, 25. OSK Oshkosh, new one I discovered this week. Yeah, we had watched this earlier in last year, and then it rallied back from 24.5 up to 40. From there, it came down and then broke a double bottom last week. That was key late on Thursday and Friday here. This big hit to the downside, broke this double bottom and reached the bottom of the channel. Now, it may get a bounce, but any move back up towards this zone here would be potentially a short for a target down around 28 and then 24.5. PF Chang's China Bistro, very toppy formation here. This key neckline was broken on Wednesday. As you can see, the stock then bounced on Thursday and came down again Friday. Not a good sign. The stock looks lower to me. My target would be at least in this zone here, across this high and that low here, around 36.5 short term. Beneath that, we'll have to see what happens if it does go any lower. 33.5 would be my secondary target. Rent-A-Center broke hard last week on Tuesday, but cracking its trend line and moving averages, which are now flattened out and turning down. This little bear flag in here could lead to lower levels. First target 28.5, second target 25.5. Transocean, well, you know this was a short of ours down in here when it broke with the oil spill crisis, having dropped from the 90s down to the low 40s. Finally, after that was resolved, the market ran it all the way back up towards the mid 80s, formed a hidden shoulder stop, left shoulder, head, right shoulder, broke the neckline here, slight bounce back to it, broke this previous high support here, and then bounced back to it. Just looks to me like a stock roll over. Moving averages are crossing over and rolling over. At this point, I would look for that stock to come down further. My target 62, 10 points. RIM, looking as bad as it gets. Little head and shoulder top in here. Gap down, came down steadily, rallied back to resistance, and then got crushed for almost 8 points on Friday. 48.68 down 791 or 14% on 45 million shares. At this point, even though it may bounce and form a little flag, that could be an entry for further downside. I'll have a target down around 42.5 at the August spike low from last year. Rockwell, big move up from 48 up to 98 in the last 6-7 months. However, last week, after double topping, it broke hard on Wednesday, bounced, and then came back down on Thursday afternoon and Friday. It looks to me like if this breaks through this low here, we're going to see a quick test of 83. And if 83 is taken out, secondary target would be around 77. Those are your targets for Rockwell. ROVI, ROVI has been on our box of shorts list for a while now. After this head and shoulders top broke it here, formed a big bear wedge over 5 weeks, and then slipped lower. Finally took out the low here, bounced back, and it's been drifting lower, closing at the lowest level since October. There is some support in that zone in this area around here. But if that's broken, I expect the stock to work its way to test 44 and then 41. Success factors. Nice chart, having run up from 19 to 40 over the course of the last 7 months, but a sharp break last week broke through the 21 and 50-day moving averages and kept going. Right now, closing just slightly below the rising channel bottom, but there is support around 33. That's what I expect to be tested. And if we do get a bounce off of that level, perhaps a shorting opportunity. In any case, if that's broken, look for a move down towards 30 and then 27.5, 28. TDSC, big move last year from 12.5 to 58.5 of the last 7 months. This stock is from some sort of topping pattern, perhaps a left shoulder, head, right shoulder here, a little sloppy, but in any case, big hit down on Thursday. Well, dropped another 99 cents on Friday. It's right at short-term support. If it fails here, we can see a quick fill of the gap down towards 34, and that would be my first target. Secondary target down around 26. Thor Industries continues to look negative. Big, massive topping formation in here. There is support at that level around 29, but if it rolls over and takes that level out, we could see 25 and then 22 on it. So keep an eye on that one. New one, Trimble Navigation TRMB. Having had a beautiful run up from about the 27 to 52 range, nearly doubling in the last 6 months. You can see it had a sharp break, that dropping 361 or 7% on 3.5 million. Very heavy buying for that stock, and breaking through its 21 50-day moving average and rising channel bottom as well. There's some support around 45, 5.5 range, which may be tested quickly. I do expect potentially if that occurs that it could bounce, but in any case, my trading target is down around the 42 level eventually, particularly if the market weakens here. Under Armour, a big monster and a big market favorite in the last couple of years, has moved from 12 to 80 over the course of that period. And you can see this rising channel in here looking very good. Wanted to point out that last week from Tuesday through Friday. He got hit hard on Tuesday, bounced near the 50, took the 50 out on Friday, and closed at the trend, and bounced off the trend line. But a break of that should lead to a quick move down towards 62. That's my initial target. If that doesn't break, of course, we don't initiate the short, or we wait for a bit of a bounce that looks like a low volume bear flag, etc. Either case, I'm expecting eventually for that to break, and then a move down towards the 55 range to take place for Under Armour. VSEA, another new invariant semiconductor, nice rising channel from 26 to 50 over the course of August through February, but then it came down in March, bounced, made a lower high, and then took out the trend channel, but bounced back to retest it, and the moving averages, which are crossing over and rolling over. And then Thursday and Friday were the big down days for the stock, dropping 325 on Thursday, $1.69 on Friday, and testing key initial support. If that breaks, 37, 7.25 my target. If we do get a little bit of a bounce or bear flag in this area, that would be a shorting opportunity in my opinion. Eventually, if this thing does fail and take out 37, we could see something down in the low 30s on it. And lastly today is WMS Industries, which has been on our charts for months now, after having broken the end of last year right in this zone here. This breakdown here, followed by that bear flag action here, led to this down move, which led to that consolidation. We've now had a 1, 2, 3, 4, 5 wave down, followed by this, which ended with this big gap down in heavy volume. No surprise we had a snapback, but the snapback is not impressive. And any further move up towards 34.5 or so, in my opinion, would be a nice shorting opportunity. But that wouldn't work. And if that does occur and it fails in that area and starts to roll over, next target is about 27.5. That's it for this evening. I wanted to give you an idea what the box of shorts were looking like. We hadn't gone over them in a while. Be careful out there next week. Bye-bye.